Well, hopefully you're having a great Wednesday afternoon, and we're going to be jumping into some really good outlook on Big Bear AI that, defense stocks have found, which is more defense spending. You got more defense spending in the government. You got the trend towards the deconsolidation and new defense spin-offs that we're seeing with, for example, over the Middle East, you're going to see more spending. You got now Venezuela. That was something where we had some more military spending. You're definitely going to see Russia, Ukraine tension, and then some of the hotspots. But anyway, we're not really going into the military side as much, but that does mean that defense stocks are seeing a surge, and that's why we're going to go into Big Bear AI. So Big Bear AI is a stock we've been covering for a while, since around $1 a share. And they've seen some growth over the last year. They've made some runs up into very high levels of around $10 a share, so 10x. We were trading TSSI this morning. There, $1,100 gain so far is a nice trade in the data center market. So that's been a good day there. And then on the Big Bear AI side, we also had a trade running over in BAIG, which is down about $100. We were looking at this dip buying opportunity, but we were already in it a little bit higher than we would have liked at a market open. And so we did see a slight pullback, and then they kind of stabilized. So Big Bear AI, let's kind of talk about where they're at and what we got going in the short term. And let's also talk about some of the market direction. I started measuring better markets in this revolutionary new platform, Prophecy AI. If you guys have not had a chance to check it out, take a look at this. We've got some of the best models in the world: Grok, OpenAI, Claude, Gemini, and many others. But we just added markets, so you can visualize different markets here in this type of way. Look at this. All right, so I got technology. I've got AI, software, quantum, semiconductor markets, the cellular defense, devices, cybersecurity, data analytics. What about aerospace? I could see defense. Oh man, this is getting exciting. So if I just jump into technology, get into Big Bear AI is one of the top companies there. You got Palantir. Of course, there's Lockheed Martin. You got Amentum and Black Sky, along with Redwire, Rocket Lab. You got quite a few large companies that are here, but also some small companies here like Big Bear AI. And so in the defense side of things, been really looking at where they're kind of fitting in. Got some market discovery here that I'm really excited to jump into tomorrow in our training for Prophecy. But here's what we got going. So again, Big Bear AI, we were trading BAIG, the 2x. The 1x is just the normal stock, has been trending up over the last year. We saw them just around $1 a share when we started covering them back here in November. We've seen them surge to new heights up to $10 a share, but kind of considering their current trend where they bounced down here on the 31st, this is actually kind of the trend I'm watching, that they get back up into that $6.50 range. They're at $6.24 now, and even potentially up into that $7 range, which would be about a 20% increase. And then ultimately, what we'd be watching for this company is a potential increase up into $10 a share. Now, why is that? Well, what you need to know about the macros is that, if you're looking long term, it could be making sense not to look at Big Bear AI because there's so much volatility. It would make sense to roll into more conservative plays, in the defense market, which we could pull up the AI defense market here. Okay. But the volatility definitely can negatively impact. We just saw, Supreme Court rulings related to tariffs, those types of policy changes, or any policy changes can have a very strong impact in the short term. So just keep that in mind. But if we see a strong dollar, is kind of what we're seeing right now, and if spending pushes deficits even higher without offsets, like let's say tax hikes or maybe spending cuts or other money coming in elsewhere via tariffs or something, and let's say interest rates and inflation expectations climb, squeezing some valuations across companies like defense is something that could be a little bit difficult, meaning the subsegments, the smaller markets like Big Bear, are higher risk. There's to kind of give you higher risk output on Big Bear. But nevertheless, we're going to take a look at what's going on recently. So they've come out with some recent articles. They have their computer vision, their recent acquisition finalization of Ask Sage, which is an AI company they recently purchased. And just today, they had a full conversion, 6% convertible senior notes due 2029, significantly strengthening the balance sheet. So BigBear.AI has partnered with Kraft Group, New England Patriots. They've also strengthened the balance sheet here. And this was just this year. And then right before the end of the year, really in the last few hours, they were able to finalize that $250 million acquisition of Ask Sage, which is interesting because they're paying $250 million cash, which is about 10 times the amount that the company brought in on an annual basis, or was projecting they were going to bring in on an annual basis of 25 million is what they were projecting. They paid 250 million. But BigBear.AI came in with great earnings for the most part on the balance sheet side. They came in net income positive, so didn't really lose any money at all. Assets came in on track to hit nearly $1 billion. So they're definitely starting to become a company that's gearing up for valuations of that $2 to $5 to $10 billion. And currently, their market cap's holding at just about 2.7 billion. And so if they're going to get in that, $2 to $5 to $10 billion, a couple things need to happen for them. And that's what I want to go into really quick in this video. And I'll share with you exactly what you need to know about the different things that need to happen for them to really hit that $5 to $10 billion market cap. Okay, so we're going to jump into it. And how's everyone doing today? I hope everyone is doing well. Can all hear me, see me okay? And Toku, good evening. Steve, how are ya? Coco Loco, hi. Boris, BBAI. Yep, they paid some debt off, says Arshfear. That's good. Biggie, hi. Kurtz, hello. What's going on? Jzev, what's up, everybody? Judy, good to see you here. And Lee, Judy and Lee here. Husband and wife tuning in. I love it. Jzev, how are you doing? BigBear.AI, what's up? Will, Luis, it's going great, man. I don't know if you guys could see all the huge boxes behind me, but we ordered something on Amazon, and my wife Tammy was like, we're taking it out. She took it all out, and I've got to still assemble this thing. I still got to hit the gym, push a little update, and get a meeting here, and I also got to assemble this this huge bookshelf. So that should be fun. Shaz, what's going on? Mike, hello. Johnny, what's up, everyone? How's everybody doing? Entry on TSSI, we can go into it. Let's get into it. BBAI, we'll get into it. Mike, how are you doing? All right, guys, good to see you. So once again, there's three things we look at when we're analyzing a stock. So for BigBear.AI, a couple things working for them right now. One of the things includes that they have more growth in the defense sector. They're seeing that there's more spending, larger contracts related to what they're doing. They've got partners with Palantir, partners with Redwire. They've deployed aggressively their new Veriscan technology. So the market's growing. They're in a growing market. And then number two, their cash is increasing. So they're gearing up for something. See their total assets increasing. Now the issue that they have, that this is what has to increase, obviously, for them to carry out momentum. Luckily, every time that they've pulled back from $9 a share down to $6 a share, they've recovered. Or every time they've pulled back from $10 a share down to $250, they've recovered. And they've bounced on this 200-day moving average. So they've kept their upward momentum. They've done that, but what keeps them from really breaking out to $10, $20 a share? And why do they keep getting rejected around this $8 to $10 range? It's more likely than not, it's looking at their financials. While they've increased their cash, while they've deployed more of their Veriscan, and they've acquired Ask Sage. I just went through the airport. We were flying to Argentina, and I was excited to see BigBear.AI in LAX. They're in Denver International Airport, Dallas. Just flew through Dallas when I was going to CES for the conference week and a half ago to go see the quantum computing insights there. And that's a really great market. We're going to cover some more later this week. I'm very excited about that, and also how we're integrating it into Prophecy AI as well for the analysis, which is also very exciting. In fact, I could pull up BBAI right now. Why don't we get some projections going here and see what Grok or OpenAI or Claude has to say. But ultimately, the revenue has stayed flat on BigBear.AI. So that's what's keeping them really from surging. Now that's one thing, but the other thing is that while they're getting, this infrastructure out there, and they're building their partnerships, and they're building their cash flows, they still haven't converted all of that effort into cash, into revenue. And so this is kind of a story, and it took about 6 months or so before, for example, APLD, we saw all of this infrastructure building, and you got more of a clear picture on the dollar amounts. In fact, they were getting money from CoreWeave and others, and we were anticipating that was going to show up on the balance sheet or on the revenue. Whereas with BigBear, we've seen them deploy, and then also buy a company for $250 million. And so they've spent money, but we've seen them really make money too much. I don't know. We're still waiting on that. Revenue is down 20%, and we got to see that materialize. That being said, I'm still holding long-term positions. We're not covering it for no reason. We see the deployments into the Panama Canal when that's much needed. We see the Veriscan technology right ahead of the World Cup, and they're at dozens of airports now. We see their cash increase like they're gearing up for something large. This is an all-time high for them at nearly $1 billion here in assets, with $610 million in equity. So even if they come out and they lose $250 million from next quarter, that's still going to come out most likely better than what they had last quarter. So they're still building that cash reserve. And so now, as we look at their current levels, what are we seeing in the near term? Well, in the near term, what we were trading this morning with BAIG, we got entered in at around $11.40. It's currently holding around $11.10. And we're looking on the 2x of BigBear to reach up into about $12.50 to potentially up to about $15, which would be potentially a 50% increase. So it's a 50% over on BAIG. What does that mean for BigBear.AI? It means it's going to be half that. So about a 25% increase for BBAI. And so a 25% increase on BigBear.AI would look something like this. A breakout above and into these levels of around $7 a share. So it's currently at $6.24. Now, here's what you got going. You got a few things working against you. You see them start to build this momentum, but ultimately they've had trouble breaking out. You see them get rejected 4 times at this $6.50 level just in the last 3 weeks. They just can't seem to break above it. And so I'm in it, obviously, and we're anticipating the breakout of about 15% here, which would be about a 30% increase over on BAIG, up to about $7 a share. So that's what we're anticipating. But in the short term, once again, I'll just kind of reiterate a little bit here, which is if you're investing in the market, the reality of this market is that there's a lot of government instability right now. If you guys see, Bitcoin surging, you got the US dollar shaky. One day it's getting stronger from potentially more oil or cost of goods going down, which might make things look better. But then the next moment you got some stagflation happening, and then more money printing, and now maybe it's good, maybe it's not good. It's not good either way that there's a Federal Reserve that, maybe it's good as a third party, but it's not even a government agency. Do you ever wonder why the president never touches the Federal Reserve? It's because it's not part of the government. That's why. And so what is it? It's a private company. Okay. So it's a private company. So in that instance, with the Federal Reserve, there's no control over that company, so long as they don't break the law. And then you see that the some of the, I guess, angles to go after the Federal Reserve to no problem. I mean, the Federal Reserve. I'm not saying the Federal Reserve is good. In fact, it's fine. But I will say this: you don't need to. You need to buy assets for sure. You have to hold assets in today's world, especially when you hold assets in defense, probably in the AI markets, because they're seeing so much growth, they're creating so much value, and also they have an advantage in that they essentially are guaranteed contracts by the government in certain ways. But even with that opportunity that is right there, right, buy assets at the same time, realize that the same way that the United States was, founded by, our the founding fathers, and they came up with the Declaration of Independence, and it has withstood the stand of time up until now. I think there was even another kind of wave of founders that were in the private sector, which were actually your Rockefellers, your Vanderbilts, your JP Morgans. And they had a very strong hand. You should read the book. It's called Jekyll Island. They had a very strong hand in creating the Federal Reserve, which controls all of the money supply of the United States. And in that creation of the Federal Reserve, the goal from those, you could say, founders in the 1900s was that they wanted to preserve their money and preserve their capital. It's working, and it's worked, and they're very smart. They are very smart, and they set up systems that work very well. Things start to get a little destabilized, though, when the government potentially gets involved in the Federal Reserve. And so those things right now, you got your problems. But here's the thing. What happens is, even if something happened, you had a lot of inflation, the best thing that you can do is hold things that are tied to assets. So for the long term, I'm not touching anything. I don't get shooken out by anything in the government sectors, things like that, or anything at all. Even in the AI market, I don't believe in the AI bubble. I think we're creating tremendous value. And you shouldn't either. You should really look at the value and think for yourself. And just have a strategic way of thinking, because the long term, it's looking very good. I think this company, as long as they continue to build the revenue, there's a lot of indication why they would grow. We see the increased positions, 214 versus 100. So JP Morgan is buying. You got BlackRock purchasing. You have State Street as well. Charles Schwab, Vanguard purchasing BigBear.AI, and institutional buyers are holding. And a lot of the uncertain buyers in BigBear got shook out either in the earnings back in August or after this dip from $8 down. And so a lot of the holders currently are legitimate investors. You can just see the market cap building over the last year. See that? So these are all key things that I think will contribute to the growth of BigBear.AI. However, the resistance levels, again, it's a strong indicator. Value, this stock is being held up by technical momentum and a little bit of extra cash on their balance sheet, but they are not being held up by a value discrepancy in that they should be worth a lot more than they're currently worth. Does that make sense? However, the technicals are allowing this trend to continue right now, and also some of the cash they raised, and also some of the news and things like that. So if they start, let's say they come out with good revenues, then you have this continued momentum. You have something very big, very large, building momentum to potentially up to $10 to $20 or $50 a share if they were to come in with hundreds of millions of dollars in revenue, which we actually kind of expected last year. They didn't do it. They came in with less and less. So we'll have to see if it comes out. I think they got the value to the marketplace potentially to be able to come out with some great numbers. And that acquisition of Ask Sage already has contracts built into it. In fact, when they just acquired this company, Ask Sage, they already had contracts. So they already had contracts with the governments. That's probably why they acquired them. In fact, Ask Sage supports more than 100,000 users across 16,000 government teams and hundreds of commercial organizations. So that's a pretty strategic acquisition. They paid a premium, 10x the valuation of their ARR, 10x which is fine. It actually might be good because how fast the AI market's moving, it might be all right. But ultimately, long term, I continue to hold. Short term, we're also in a trade here on BAIG. So we're going to be watching that throughout the day. Same thing with TSSI as we're in a trade there. Any questions on Big Bear? Any questions on Big Bear? Okay. All right. You got some other Coco. Could it be that BBAI is overvalued? Yeah, I mean, from a financial standpoint, they look overvalued. Did that make sense? Actually, I'm not saying they're undervalued, but their technicals indicate that they're seeing some momentum. They're building reserves by massively diluting the stock, and they're not a profitable company. Well, according to their last quarter, they are a profitable company. Came in with positive net income last quarter. So that was good. But you're right. You know, there is the potential for dilution. We haven't seen that fully materialize. So that's something that could happen. But let's not twist things. Even though it wasn't more revenue, they still came in with a positive net income last quarter. Yeah. So anyway, that's one we'll be focusing on into today, guys. We're also focusing over on the support levels on TSSI, and we're looking for a potential recovery. We're in TSSI as well. We traded them this morning, and we're up just about $1,100 in our daily live trading session. If you would like to tune on into our daily live trading session, you can always find it in the second link below. And one more thing, the current financials or the current projections from Prophecy AI indicate that BigBear.AI is going to see some corrections in the near term. So watch out for that. You do see some corrections potentially into the next market open, maybe even a dip at market open. So we're in it. So that's a little nerve-wracking. But you do see that the longer term 3 months bullish and up into that $8 range into 2026 here, which is a 28% increase on the stock. So that's why we're watching it as well. And then finally, can't forget, we were going to do a quantum analysis. So let's do a quantum analysis, see which time frame has the most confidence from Prophecy AI. So first, we searched the stock. Oh, actually, first, we picked the AI model. And then second, we searched the stock. And then we got our projections. We put those projections from the AI model into IonQ quantum analysis. And according to IonQ, when running the quantum enhanced analysis, we have a 1 day confidence of 75% confidence from IonQ. For the next day, the 1.5% potential increase there on Big Bear. And so we're going to be watching that again. I appreciate you all. Thanks so much for tuning in. We also added some new market connections. Look at this visualization. So excited to jump into it. We had the 3D view. It was a little bit hard to manage. So before we build that out, we're going to get a little more straightforward with the 2D view here. Visualize some of these markets. Get the sub markets. Get the micro markets. See it all. Very excited. Thank you guys so much for tuning in again. And if there's any catalyst, there could be some catalyst towards the end of the month. We'll watch there. See if any opportunities present themselves. We'll be there at Market Open trading Big Bear as well. If you want to tune on in, see my entries, see my exits, get a free t-shirt, the second link below. If I earned your thumbs up, hit the like button. Do consider subscribing. And I'll see you guys in the next one. Take care.